Hello, welcome everyone. We're going to get started in a minute or so. Lots of folks joining today, and so everyone's starting to trickle in. So while we're waiting, let's see where everyone's calling from today. Mike, where are you at? Where are you at today?
St. Louis, Missouri.
Oh wow, all right. And then Darryl, where are you calling from today?
Yeah, I'm in northwest Detroit, where I'm looking
Awesome.
outside and I got a couple snow flurries going right now, which is hard to believe.
Couple more weeks. Hopefully, it starts to get warmer there. Everyone, put in the chat where you're calling from. We'll get started in 1 minute and get this thing kicked off. We're excited to present the State of the Industry AR analysis for law firms. So we'll be on in a minute. Wow, no snow in Texas. That's good. Um, the weather's been a little nutty all over the place there. So another 30 seconds or so, we'll kick it off. We see more people joining up. So appreciate everyone being here today. We're just gonna where you're calling from in the chat, be awesome. And we're gonna get started with this exciting webinar. You're gonna learn a lot today. So all right, well, it's 1 minute after the hour, half hour, so we're gonna get started on this presentation and kick it off. All right, so my name is Michael Glasser. I've been in the legal industry actually my entire career. I was just thinking about before I get on today for law firms and legal industry my entire career. I specialize in IT and cybersecurity. I've written a book on cybersecurity. We're not here to talk about cybersecurity today, but I've had an opportunity also to meet with the sharks on different things about the industry as well. And looking forward to a exciting interview really with Darryl and Mike today. So, why don't we kick it off? Darryl, tell us a little about yourself.
Sure. Hi, everybody, and thank you for joining us. My name's Darryl Hair. I'm the Chief Operating Officer at Frontline Managed Services. My path in legal was a little bit different. I spent 9 years in the military, most of the time as a pilot in the Navy, and then the last 2 years working in the Pentagon. Reason that that's relevant is, you walk away from military training and you realize the importance of process, discipline, and resilience. All three of those things have really helped me in my legal career. And then when you think about financial management, it's the same thing. You need to really get and have the best results. You need a really good process. You need discipline around the process. And everybody on this call knows you need a lot of resilience to work inside of law firms because you're going to get pushback.
Absolutely, Darryl. Thank you for your service. And Mike, tell us a little about yourself.
Mike Ferdman, Senior VP of Financial Management Services for Frontline. I've been with Frontline 29 years now and have seen this industry change dramatically over those years to, in my beginnings, when you were working with attorneys, they refused to let anyone contact their clients, fearing that, it would damage their relationship. Um, those were interesting days when performance of law firms wasn't really managed and monitored. It was all about partner earnings, and that was the only gauge, which is still important today. But there are ways to influence that by looking at the financial data, which is what we're going to touch on today.
We're excited about that. Thanks, Mike, for that. All right, so look, Darryl, tell us a little about what revenue cycle management is and why that matters for law firms.
Sure. So, first I'll just kind of tell everybody a little bit about Frontline Managed Services because I'm not sure if everybody here is familiar. We are the largest single provider of revenue cycle and managed IT services for law firms. So we're the only ones that provide both of those. We have an extensive client base. We've been in business since 1987. And back in 1987, it was called Cash Management Solutions. And that's really the start of our revenue cycle management, which is what we're going to talk about today. Personally, I've worked with Frontline on revenue cycle management since 2008 when I was at Kroll and Mooring. So I love this part of the business. I'm excited to talk about it. Revenue cycle management has three real parts of it. One is AR management, which is the legacy of our business. Still one of the largest parts of revenue cycle management. The second part is billing. And then the newest part is our e-billing services, which is our fastest growing part of our business at Frontline Managed Services.
Great. Thanks for that introduction, Darryl. Appreciate that. And so today we're going to talk about four key things, the industry data snapshots. Mike and Darryl have a lot of great information to share. We're going to talk about growing financial trends we're seeing as well, and billing collections efficiency, and also finally how leading law firms are improving AR. We're also going to take your Q&A. We're going to save those to the end. So please post your Q&A in the chat, and we'll keep those at the very end of the webinar once we get finished with it. All right. So look, why this matters to your law firm. Now more than ever, We've going through a lot. We're hearing a lot. Today is really crucial, and you're going to hear and learn from the experts about actionable takeaways so you can start on and learn about today to really take focus and action on. So look, you're going to learn what you can do to help your law firms. That's the key here. So Mike,
So
for context.
Michael, let me drop a couple comments on that last slide. So it shouldn't be a surprise to anybody on this call that law firms spend a lot of time comparing themselves to other firms. So we like to dig in. We think it's really important that every firm spends a lot of time looking at the AmLaw, looking at the NLJ, looking at Citibank. There's Peer Monitor. There's a ton of things out there. We believe that you should compare yourself against other law firms out there and across the industry as a whole. But we lean into compare yourself in terms of the financial performance and the financial KPIs. And this is why we're on the call today. We've been in this business for so long that we have a massive database, and we measure numerous KPIs. And so what Mike is going to share with you is some really high level KPIs. But if you're really interested in this, what we'll do is we'll do baseline assessments for individual law firms, and we'll take your own data, and we'll also kind of focus our data a little bit better in terms of what segment in the legal market you are. But what Mike's going to show you today is just general across all of our legal industry database. So I just wanted to tee that up, Michael.
No, 100%, definitely. And actually, that leads us in. Mike, for context, why don't you tell everyone why we are the authority and how we compile and collect this data on the legal industry?
So we have data from over 200 law firms across the industry of all sizes and types. Our process when we harvest data from our clients is a direct data feed from their accounting systems. What difference that makes is, as opposed to some of the other benchmarking services that Darryl mentioned, is this data is not manicured or controlled in any way. This is the good and the bad. This is the truth, because it's a direct pull. And then we normalize that data so that regardless of whatever kind of time and billing system you're on, it all gets measured the same way and put in a database that makes it relatable to every other firm. So we normalize that data. And what we're looking at here, just the very global type of information, and we took that information and broke it out by size. So the measures that we have over on the left are just a few of the measurements that we look at for law firms. The first column under industry, that's the industry average. That's the average of all the 200 and some odd law firms that we have. But then we applied some logic to that information and said, okay, well, firms of different sizes behave differently. So we took the AmLaw 200 list. Many of you should be familiar with the AmLaw 200 list, and we broke that out because we noticed the 50 largest firms tend to function a little bit differently than other size firms. So we have that list separated. We have the next 50 down, the AmLaw 51 to 100, the next 100 to 200. And then we have quite a few of our clients that are smaller than that, and they ended up in the mid-size KPI. Two things about that. One is that really small firms, and we do have a number of small firms, tend to be specialists in certain areas. So if they're a firm that it's specializing in certain areas like intellectual property, insurance work, litigation, they don't always perform the same way. A firm that does pure contingency work, those were all taken out of this kind of calculation just because you don't want to try to judge yourself against firms that have a high specialty. So I wanted to make that clear as to why this isn't every firm that we have. It was cleaned up so that these are all kind of uniform in firms that have multi-disciplines and multi-practice groups.
That makes sense. We didn't want to skew the data.
What's that?
I said that makes sense. We didn't want to skew the data one way or the other.
Yeah. So looking at these, many of these calculations are probably going to be fairly straightforward. And we measure the hours worked. This is what the increase or decrease was from 2023 into 2024. So we just show not the raw number, but whether it went up or down. So we did that for hours worked and hours billed, and fees collected, and then WIP and AR statistics. That's the top chart. Further from that, we also looked at a couple of measurements that I need to explain. Days of unbilled. That's simply a ratio calculation, just like DSO, where we look at how much a firm billed across a 12-month period. and use that to calculate a ratio of how much they're carrying in inventory. We did the same thing for AR. So those are DSO type calculations that we use for days of unbilled, which held pretty steady. You know, a 1 day of decrease on the industry average. Days of AR, also 1 day of decrease, so they improved faster. Less inventory being carried in WIP and AR slightly. Payment realization, let me touch on that one because it is a fairly simplified calculation that just looks at of everything you had available to collect in 2023 or 2024, what percentage of that, you know, in that 12-month period did you actually collect? So it's just, you know, the build amount or the amount in inventory divided by collections. And then which held fairly stable across the year. And then we always like to look at, you know, write-offs just as a balance check because, you know, increasing write-offs can affect your days of unbilled, days of AR, and your payment realization, depending on how much of it, you know, is greater or lesser than the year prior. And then we do on the bottom here just a simple calculation of average billing rates, just to look at the impact of rate increases this year versus the year before. And it's a very simple, again, very simplified calculation. We know how many hours across the industry were worked. We know how many hours were actually billed. And then we know how many billing timekeepers there were available. And we just divide those out to give you what the industry rates were across those spectrums, and then what the percentage of increase was across those different size groups.
Great, thanks,
So
Mike, for
Mike,
that.
when you look at this big table right here, there's one thing that jumps out to me, and that's the fees collected grew faster than the hours worked. And if you look at that, there's a little more analysis in here, but it really looks like it's the difference in the two is the rate increases. So for me, you know, the big caution when I look at data like this is manage your inventory. Make sure that, you know, there's enough inventory for this year to meet your budgets.
Great, thank you. And so, Darryl, what are we seeing out there in general?
You know, I mean, what we're seeing is there is still increased work and there is still increased revenue. So you can be a little bit bullish about, you know, where the legal industry is. That's early on this year. We're seeing the same thing. As I said before, I would watch like the growing WIP and the AR trends because what we've seen with some specific clients as well as the industry as a whole, and this is where it's really impactful if we do a baseline assessment for any one of you, is what we don't want to see is are those balances going later and older and into buckets further to the right. Because what we do know is as soon as those pass 30 and 60 days, they become a lot less collectible and billable, both of those. So in each bucket you move 30 days, it increases, you know, from 4% to 8% to 12%. And you're getting to 180 days out. Bills that are 180 days out are 50% collectible. So we really, really, you know, encourage people to watch their aging out there. Mike, anything you wanted to add in here?
No, I did want to point out we have a bullet here about fees billed and fees collected that rose, you know, significantly at the MLOF 50. You know, 11.5% fees billed versus 11% fees collected. But we just talked a minute ago about rate increases that were 7 and 8%. So there are some interesting anomalies that happen there. What we've have researched and found out, some of that is because firms have been stealing, I don't know what else to call that, moving revenue from one period into another. In other words, during your December push this year, accelerating payments from January into 2024, and that cycle that keeps happening for firms because once you've started it, it's a rough cycle to break. That seems to be what's driving the fact that, you know, these firms, yes, there was some productivity increases that drove some of it, but a lot of it was rate and some of it was, you know, bringing those revenues into the current period.
Interesting. Appreciate those insights on that. That eventually, as you come to the end of the year, can you keep billing like that when you've already billed before, and that growth might not hold true over time, right?
Well, you start the new year out with less inventory, and you make yourself, you create work for yourself and on your attorneys to bill more in that period, to match that cycle because it keeps repeating.
Yep. Interesting. So, what are we seeing from out there from the best law firms in terms of realization, Darryl?
Mike, I'm going to let you take this one.
So what we are looking at is, days of unbilled and days of AR that are improving. Payment realization is largely, unchanged. Bill rates have increased, but what we are, looking at is with some firms individually, that write-offs play a big part of that. You're seeing some firms using write-offs to adjust those figures. I'm not sure that they do it intentionally, but that's a big key as to when you look at your own firm's individual performance, is to not let things like that be masked. And then from what we're talking about in payment realization, those are industry numbers, and the industry average being around 82%. The best firms that we work with are in the high 80s and some in the very low 90s, which is quite a difference. If you can, figure out, what your annual billing amount is, and then it should be easy to figure out what does 1% more realization mean to your firm. All the bills have been paid. All of that extra revenue goes right to your partners, basically.
And Mike, we need to be clear again, payment realization is not just the collection realization number, because if you're looking at collection realization over 2 years, you're gonna say, but gosh, I'm up in the 90s. We're talking about payment realization here.
Yeah, firms do collect a certain percentage of their AR that's over 365, and that's why a collection realization, a typical traditional 2-year curve would be higher, and would be, well, we do measure that, and the industry average is 93.4%. But to look at current events and current performance, we find that 1-year look back is a better indicator.
Great, thanks,
But as
guys.
Mike said, I mean, if you're at 82% on this payment realization, and we have a lot of clients that are in the upper 80s and right at 90, you can do the math on that. For every 1% across all of your fees collected, it equals this much money, goes to distributable net income. Figure out how many points the partners have. You can do the calculation. So that's where, we really get in there. We look at where the losses are, and we put in the processes in place in order to make those metrics better.
Good question, guys, and something off the curve here. Is that something we can help with in a bar up front when we do those analysis, or to understand a little bit?
No, it's a great question, and it's not up front with the bar, but after we do the bar, after we collect the data, and after we look at it using our proprietary software, and we look at the different aging buckets on both areas, billing and fees collected, we can easily identify the areas where a firm is falling below average or losing more than we would expect them to lose. Mike?
Great.
Yeah, that's an interesting question, because whether it's bar data or the data we get every day from our clients, what's visible because of its ability to drill is how are they performing, not just at the firm-wide level, but by office or by practice group, or
Right.
comparing attorneys against each other, and then even further than that, client performance. If you have enough history with a client, you can look at which clients are more profitable than others.
That's awesome. And look, what we're really getting at is, through our data analysis, we're really giving actual business intelligence back to the clients that they really couldn't get elsewhere. Awesome.
Correct.
Great. So, what's the data telling us in 2025 to start with? We're almost, we're close to the end of the quarter, about 2 months in. What's the data telling us, Mike?
So interesting that we just have a couple of months of data here, not a full quarter. We will be repeating this kind of data review once we have a full quarter's worth of data. But we are seeing a little bit different trend. We saw hours worked take a little bit of a decrease across the board here. Some of the stats are a little bit unusual in the fact that fee WIP is starting to grow. Even the mid-sized firms, 13% fee growth in fee WIP. And what does that mean? And then I did include a rate variance chart just to point out the fact that I get asked often what firms, have used as their annual rate increase this year. And unfortunately for us, the data, in February is still not complete enough to see the impact of the full rate. Most firms just started really implementing those in February. So I can't really answer the question of, is it another 7 to 8% this year across the board, or it will be more or less. So we'll try to answer those questions when we have the Q1 review of this data.
Great. It would be interesting to see if long-term firms start to increase their rates, starting like December 1st in the future instead of doing it in the new year, how that might impact it.
Michael, there are several firms that do that for that very reason, but it's probably not the majority of firms out there.
Right. Interesting lever to pull. Great. So how do we help firms, with reducing their age WIP? What can we do?
Well, so a couple of things that we're seeing in the industry because of, and this is, I think, going to play out a lot in 2025 because of the economic uncertainty. And every time we see economic uncertainty, clients suddenly start holding on to cash. So we're starting to see that already. As I said, industry-wide work hours are down. Collections are not quite on pace. Billings not quite on pace compared to what it had been in the last quarter of last year. And I think part of that is you can chalk that up to economic and stock market instability. What that means is you have to have a proactive approach going into managing your AR. And one of the key factors there, and we might be touching on this later, but I'll give you guys a window into the fact that with so much experience working with law firms, there are lots of new tools and stuff out there, and they're great. You should harness all of those tools, but nothing replaces the human contact with your client because emails and other forms of communication are so overwhelming these days. It's almost novel for them to receive a contact from your firm asking them what might be the holdup on a payment.
And so, Michael, to your question, like, what about WIP, right? What do we do to help our clients in terms of WIP? Well, obviously, we don't make the decision to bill or not bill that the attorney has to make, right? Turning that WIP into an invoice. However, for all of our clients, we do have software and we do keep measuring we know what the WIP is. We know where the WIP is building. So we help our clients build the awareness of it. But what we don't do is kind of get into their attorney billing policies.
100%. But as you said earlier, look, it's just like with AR. The longer that WIP is out there, even if it becomes a little stale. So, helping them with that intelligence to move that WIP along and advise them and guide them is, really invaluable in my opinion. So, look, we've covered a lot of data today and a lot of trends. So what are we seeing for everyone on this to be aware of? What are the warning signs that's going on out here?
Yeah, I kind of touched on one of them, the middle one, collections outpacing billing in some firms. I mean, you just have to really keep a close eye on that. Slower growth in worked hours. I mean, everybody in this call hopefully is laser focused on what's happening inside of their firms. The future revenue part of that comment, as Mike said, I mean, if cash gets tight out there, and I can tell you this from my 20 plus years working on the law firm financial side, as cash gets tight, our clients pay us slower. So if you're slow to reach out to them and then they're slow to pay you, it's going to have an impact. And especially if it's complicated by, if you were a firm that accelerated revenue at the end of 2024. So, now you're really dealing with a long payment cycle in this year, and hopefully you can stay in front of that. Mike, do you want to take on the WIP and AR growth?
Well, and so what we're seeing is whether it's driven by demand for legal services or not, there's a buildup in WIP and AR, which means they're delaying and holding on to that. And as we've talked about a couple of times here, what does that mean to firms' profitability? Well, firms that bill late get paid late. That's just so. Even if you're going to recover at the same rate, you're actually pushing that monetary return to future periods, which is not a really, from cash flow purposes, it's not really a healthy way to manage your business.
100%. Thank you. And so, look, to you, both of you, were there specific tools or platforms that have proven to be game changers for law firms in managing their AR? What can be done?
So I'll go back to like my intro is bullet number one, which is you really need to be proactive and have a process. Allowing billing attorneys to drive their own collection process is a nightmare. We all know it. It doesn't result in better collection. So you really need a process, best in class process, and you need to stick to it.
And one of the keys that I think every firm can avail themselves, but it's not always easy to get, is managing your AR portfolio based on client behavior. This is one of the tools that we have used to great extent, and I think everyone in the industry could benefit from that. And that's knowing, if you have repeat clients, how often do they pay you, and is there a cadence that you can rely on? If you have a good client that pays you every 42 days, maybe that's something that you don't need to pay attention until perhaps now, maybe when it's at 50 days, it needs to pay attention. But in many cases, you'll never have to pay attention to that. So why spend time and energy trying to look at things on an aging and reacting to things that are on an aging instead of being a little bit more proactive, being a little bit more surgical, and understand your client's payment behavior and reacting to it as needed.
It's a good point. And so what are the biggest misconceptions about outsourcing the AR process? How can firms determine if they need help?
I would say the biggest myth out there is, we're gonna have rude collectors and knee breakers, calling our clients and demanding payment, and that's not how it works. In fact, I can tell you over the 4 law firms I worked for, we didn't lose one client because we used an outsourced AR management team.
Great, thank you. And so we've got a poll question coming up. How confident are you guys with your firm's AR and billing performance? Where it should be. Are you very confident that you have a strong process in place, as Darryl just said? Are you somewhat confident? We do okay, but there's some room for improvement. Are you not confident at all, or are you just not sure about that process? So it looks like based on what I'm seeing in the results, it looks like people just are somewhat confident. But as Darryl and Mike have been saying, in these times we're seeing now, that might not be too good because people are going to hold on to cash. It almost feels like COVID again. I know I shouldn't mention that word, but it almost feels like that as times we're in now. So thanks for answering the poll. Appreciate that. So look, we're offering what we call, as Darryl said earlier, a baseline assessment, or what we call a bar assessment. And what does that process looks like? Mike, can you explain a little bit about what a bar is?
Well, yes. So we're going to share the information that was presented in this presentation, so you get a chance to really examine it. But when we work with a firm that's interested in having us examine their data, there's just a number of different performance factors and trend factors that we look at. So we pull a data extract, we run it through our business intelligence program, and then we'll sit down with you and we'll go through it. And as I mentioned, you're looking at performance, across every dynamic, and that can be by client, by matter, by invoice, but also, from the firm level to the practice group level, office location, attorney level, and even within the attorney level. Is it by billing attorney or originating attorney or responsible attorney? We can look at working attorney. All of those things, we have the ability to break all of those things out and really see where the trends are. What areas of your firm are performing well? Where are the opportunities to improve? All of that is data driven. Many of these things are not things that Frontline is able to help you with, but we're going to provide you with information that will help you run your law firm.
Great. And this is something we normally charge for, but as a thank you for those attending today, we're offering it to the first 10 requests we receive. If you want a clearer financial picture of your firm's health, and how you can optimize your billing and collections, that's what we'll do here. There'll be a poll coming up if you do like one. We'll take the time, and Mike is usually part of that process, to walk you through your custom bar report and give you a tailored insights that can help you and your firm strengthen your cash flow and reduce your outstanding AR. So, we're happy to help with that. So please feel free to reach out.
If you have questions about what we saw today, reach out to us either now or in the future, and we'll go through the information. You're going to receive the information. We want to make sure you understand what we were trying to showcase today. We didn't want to get too deep into the numbers and make it boring, but you may have questions about how that might be relative to your firm. So it doesn't always have to be a full bar that we engage you with. If we can help you and analyze and answer some questions about what's happening in the industry, happy to do that.
Great. And we're going to be sending out the reports and the recording of this to everyone on it, so you'll gather information. Now we're going to go to any Q&A we have out there. Is there any Q&A out there for us to answer at this time?
Looks like we have one question so far. Do you have data around what you're seeing in billable hours and revenue for firms outside of the AmLaw 50?
Outside of AmLaw 50, as in, did they say what kind of size? Was that? So we have the top 200 AmLaw firms, and then we have firms. I think some of our clients are that we have data on are down around, even down 4 and 5 attorneys. I don't have any sole practitioners. We have had sole practitioners. We don't have any currently, but I think we have a pretty good mix across every size.
Great. And then another question here. Say, great data. How can I get this information?
So we're going to send you the information, and then if you have questions about that, we're happy to answer those. And if you want to see what your firm looks like, we're going to, offer that, assessment and really break down some additional, data for you in addition to what you saw here today.
Great. And look,
and we can even compare you to peer firms if you, we won't give you all firm names, but if you're in insurance defense or other industries, and we know some of the other firms that are similar to yours in size and in makeup, we can often make that tailored analysis.
Thanks, Mike. We have so much information to share. We're doing a part 2 of this in 3 weeks. We'll reach out to everyone who attended here today and appreciate everyone being on. Thanks, Mike, and thanks, Darryl, for being on today. Great information and appreciate your time.
Thank you, everybody, for the time.
Everyone.
Everyone have a great day. Be well. Bye.